All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. So yesterday I was having a discussion with Jason, and we were sitting down looking at a bunch of the data and some of the signals. And one of the things that he was curious about is why yesterday we didn't see a lot of upside signals come in. When we had some 3-7 crossovers, we had some stuff that it started to look good. A Facebook, for instance, started to look good. Was very close to a signal yesterday morning. We saw stuff like Raytheon a day before yesterday, start to make this push and this punch up. And it was interesting kind of going through it because there were a lot of things that on the surface, have some of the elements of a bull signal, or had some of the elements of a bull signal come in. But one of the things the algorithm does is it looks at past history on that stock, and whether or not what is happening now is something that typically we see a run further, or whether consolidation risk has increased based on how it has moved. And we've seen that come in here this week with some of these things that have kind of been, hey, you know what? Of course this is going to be a bull signal. No, not quite, right? Not quite. And, Honeywell, Facebook, Raytheon, we saw others, yesterday kind of punch up and, possibly create that element, here, excuse me, I'll go to Microsoft. Microsoft yesterday had that potential here. And why do I speak to that? Well, because today is very similar, only on the opposite side. Now, there is a signal on the board here right now. It's Amazon. Amazon is triggering bearish right now. Let me put that in here. Amazon is triggering bearish. But in many cases, and we have a lot of 3-7 downside crossovers going on today, but in the case of something like a Chipotle and IBM, it's when you kind of look at that, hey, past history on this type of a move, do we tend to get some very negative follow-through? The answer is no, which is, a little surprising, I'll admit. But one of those where, we can see Raytheon trigger tomorrow morning, right? This is one that is close, but not there. Just absolutely not there. Netflix was one I almost thought, what, are we going to get a trigger right here? This is one. It had a nice move up yesterday. It's ready to go, right? Trend up. No. And it kind of has that same thing of more dancing than trend, but the overall price action, in a lot of these is very ugly. So for the challenge, bottom line is there's one signal on the board. It's Amazon. Now, if I go out to trade Amazon and go to get into an Amazon option, let me pull it up here. I can't, right? This is one that I added to the watch list and said, hey, when the challenge goes, when it gets into a higher dollar amount, Amazon will be tradable. But for now, to go out more than 30 days, to look at an at-the-money option, it's $6,000 to get in. Challenge is just over $3,000. So, not realistic to be able to get in. Can't even buy a single option because of the price of the stock, right? And that's going to be that's going to be the issue with it. With some other stocks as well. A Chipotle, with even some of the things like like an Adobe or an Apple from time to time, until the challenge kind of makes that first and second double there in it. But Amazon triggering bearish here today. You can see the fresh 3-7 crossover to the downside, kind of coming in here. Let me pull it up. This is one where the 3-7 crossover happened a few days ago, but we're getting it trading into the lower side of the range, kind of a breakaway shot down, and just suggests further downward trend here on Amazon. So bearish signal here on Amazon, and that's the only signal. So I go and I take a look at what's on the board, and we have Johnson & Johnson on the board. And, I talked about this one this morning. I made the decision to hold it. Why? Because, well, this is one where, and I'm not going to re-explain it all. You can go check out this morning's video. But where the stock entry price, we actually have a stock that is trading above its entry price, right? JNJ is at 138.75. The stock's gone up since its entry, right? Now, the option is down. In fact, as it sits at the moment, let's pull it up. Maybe. Let's get this right. There we go. We're down $133 on the option. 186 is the price right here. 186, right? So we have this scenario where if we go and we take this auto exit date with red and green, and we use it based on the stock price, we're still in the trade. If we use it based on the option price, we're not. Right? And as I talked about this morning, this kind of leaves that very rare circumstance. It only happened 3 times in over 600 pieces of data, 600 individual trades. So very, very rare. And that's kind of stepping in and invoking the, this challenge setup number 10. While all trade entries and exits follow the algorithm, Jeff can step in under unusual circumstances and change a trade. And I'm not really changing a trade. I'm just stepping in and saying, hey, you know what? I'm going to hold it, and, I'm going to use this with the stock price, and, as long as the stock price, holds, then, we'll continue to run with it. The bottom line, and as I mentioned this morning, that decision isn't going to make or break the challenge, right? It's not like JNJ is going to go up $80 and the challenge is going to go to $20,000 because of it. It's not like J&J is, let's just say, even, worst case scenario, knock on wood, all that type of stuff. Let's say tomorrow J&J, we wake up and has one of these days, right? Just news-driven day, we're still, in a good spot, or, well, not as good of a spot, but a decent spot for the challenge. So we're not putting the challenge at risk by doing this, and so I'm going to hold on to J&J here as the stock price is trading above our entry here. It's had a couple, 4 days worth of kind of dip and rip here, but it's one of the few stocks out there where the 7-day moving average is on the rise, and it's also one of the very few stocks out there where the volume pattern is bullish. And that's, when you go and look at most stocks, the volume pattern is very bearish. With J&J, we have a pretty nice bullish, volume pattern associated with it here today. So, part of me making this decision is just because I don't want to go to all cash, right? I don't want to go to all cash for the challenge. That's boring. Even just being in one trade, that's not all that exciting. But with kind of the lack of signals that we've seen come in this week, gonna hold it and run with it there, and kind of using this. Using the stock price here rather than the option price. And part of why I make that decision is because, let's face it, the Monday morning post-option expiration, we just get about a 10% overvalued option, which is very normal on that day. So anyway. Running with J&J there. Again, if you want to pull it, go for it, right? Again, it's not going to make or break anything. So, go and do whatever you're comfortable with that. Now, the MarketVibe here today is taking a shot down here today. We see some serious erosion in some things. You'll take a look at the bullish percent index. We've been talking about days of it not moving at all, and the indicators don't matter. 200-day moving average on a bullish percent index doesn't matter, but you can see the bullish percent index down 5% here today. We're seeing stocks kind of start to where we've gone for about a week and a half with stocks not moving from bullish to bearish or bearish to bullish. We are seeing some of that come in today where stocks are moving from bullish to bearish, so we have some of that coming in. We have the IWM here today, which continues to lag. Was lagging yesterday, lagging big here today, and this is just breakout and fail breakout and really pull on back and pull on back strong. And the bears in the market, they look and go, the IWM nowhere close to setting a new high like the S&P did. That's some huge negative divergence, and now we see the IWM breaking on down further. That's a pretty bearish move here with it. Now the IWM is down 2.2%, right? The S&P here is down 1.6%. So we're talking 2 days in a row with small cap underperformance, really heavy small cap underperformance, and some of that just simply has to do with oil. Right. Oil has just gotten absolutely clobbered here in the last 2 days since that oil inventory report. And there's not a lot of relief balance in sight here for energy. So a lot of the smaller oil names, getting hit. But we're also seeing the regional banks get hit. The regional banks getting hit pretty hard. And if you look at the regional banks, you'll notice that they're nowhere back to those June, July, August highs like what the S&P had hit. Right, they're nowhere close to it, and they're pulling on back aggressively here, and some of that is just frankly, do you want to own a bank in this environment, right? You have the Fed basically on hold with interest rate policy and hinting at more cuts. So the fear then goes to, all right, are we just going to go to a European situation where zero interest rate has become the norm? And one Fed member this week talked about that, how that's going to become the norm, and the Fed's going to have to use quantitative easing for their policy tools in the future rather than interest rate tools, as interest rates will stay, very, very low. And so you have that from the Fed. You see the risk going on with China. You see, some of the economic data eroding. As an investor, do you have a lot of incentive to want to own and be involved in the banks, right here, right now? I mean, especially when you even have someone like Jamie Dimon talking about the economy slowing and things possibly getting a lot worse out there. And the answer is no. We're seeing, investors kind of run away from that here in a big way. We continue to see transports lag. Right, they continue to lag here. They're also helping to pull the small cap index down. So all of this is kind of contributing to that bear signal there on the MarketVibe, a -7 reading. -9 to 10 is oversold, so we're not there. -7 is pretty square bearish, and always subject to a whipsaw and all that, just like anything else. But a very bearish read here for the market vibe. Now, as we go into tomorrow, the market has the same old issues, to deal with, right? It's not like the issues are going away. It's not like trade war stuff's going away. We don't have a lot of data for the market to wrap its head around. Durable goods orders, which is basically, okay, how many planes did Boeing produce? So not exactly a market-moving number there. So just very little for the market to really kind of sink its teeth into that is, known, that is coming. So eyes will be on, some of the language that comes out of China tonight. U.S. President Trump's Twitter feed, and if there's not a little bit of a positive catalyst, we can see the market just carry forward pretty intensely with some of the selling going into the weekend, from a market index standpoint here. So that is, that's one of the risks on the table here for the market. One of the things that the market's going to have to contend with going into tomorrow. Was asked earlier today about oil and possible bottom, and where do you see oil bottoming, type of thing. And my response was, I don't. And one of the things here is there's no sign of oil bottoming, but oil trades in a very technical manner, right? And if we kind of take this rally from this year, we see, hey, the rally's finally retraced. Okay? It's finally retraced. Very normal, right? That's not an abnormal type of thing for oil. Some of the speed and velocity at which it's retraced, that's a little intense. But it's only at the first retracement, right? To come down to a full retracement would not be something that is unusual from a technical standpoint. But one thing to keep in mind is that if we're retracing it in this manner and saying, oh, okay, here's the retracement, we're looking at it from a very bullish standpoint. We can switch this around, and we could go very bearish. We take and we slap a retracement on this drop here from October to December, and we can see that, all this year's rally did was retrace the drop from October to December, and now the downward trend that started October, November, December has just started again. So you don't need retracements. It's ready to go, and it's going to go and set a lower low. Right? That would be the norm if you're looking at it from that perspective. And it's one of the things with technical analysis, you can always look at things in multiple perspectives, but a bull's going to say, "Hey, you know what? It's finally retraced. Let's go. Let's buy." A bear's going to say, "Hey, yeah, it finally retraced, and now we have the downward trend. Let's go. Let's sell this thing." Right? Let's sell this thing and and push it on lower here. So both of those arguments come into play. I think if you want to play a bottoming in oil, right? If you want to play a bottoming in oil, you go and buy Exxon, you go and buy Chevron, you go and buy ConocoPhillips, right? And we talked about these stocks yesterday. We showed the fundamentals on Chevron, and it's going to outperform the energy sector overall. And we see it today, right? Energy sector down 3.9%, Chevron down 3%. So, you have a big drop in oil, Chevron outperforming energy. And, that to me is the trade. If you want to be involved in oil, that's the trade. Long Chevron, short XLE, and play that differential rather than play the direction there of oil. If you want to short oil, right, there's plenty of stuff out there. From a Halliburton to a Schlumberger, where you can kind of look and say, hey, you know what? Let me buy some out of the money type of stuff and see what happens. But be careful. Some volumes have really come into some of these names today. The Halliburtons of the world. I mean, that's bottoming type volume. Transocean, big volume right at the lower Bollinger Band. So with some of these names, we're seeing some big volumes at some key areas. There's always exceptions, and one is Noble Energy. Noble Drilling. Is this one's on its way to bankruptcy here, but we see that kind of heavy pressure there, and it's one where tomorrow to see oil up $1.50 wouldn't be a big stretch. It's not going to take a whole lot for that to happen. And you think about the major players when it comes to oil, right? U.S. President Trump, which way does he want oil to go? He wants oil to go down, right? OPEC, which way do they want oil to go? They want oil to go up, right? And so two of the kind of more vocal players on the world stage right now have very different incentives here for the price of oil. And so it's not like you can kind of buy oil and say, well, you know what, the powers that be really want it to go up. So, there'll be some positive commentary, coming into play here, right? You think about the Iranian situation, you think about, the Venezuelan situation and what's happening there. And even with all of that supply being taken off the world stage, we have oil falling. And that's, that is extremely bearish from just a global market trend standpoint here for oil and for that commodity. Okay. Now, last thing I'm going to take a look at here is gold, GLD. Nice little bounce in gold here today, right? And you know where I stand on gold. Excuse me. I'm very bullish in gold, right? I'm very bullish in gold. And this year I've started to build a position, right? And I have about 40% of my position on. And, still looking to put about 60% more into it, right? One of the things that I've mentioned I'm looking for is I'm looking for the gold miners to start outperforming gold, right? And if we take a look here today, the gold miners are up. They're up 1.3%. And gold itself is up what? It's up 0.8%. So the gold miners are outperforming here today. But are they outperforming overall in any sort of kind of real metric outside of just today? They're not. They're still lagging. They're still lagging the price of gold here over the course of the last 2 months. And so it's one where as long as we see these gold miners continuing to lag, to get very confident that right now is the time gold's ready to go up, you just can't. Right? You just can't. You have to be patient here with it. And, while I like gold long term, still in the short run, there's still some, potential trouble in the water with the gold miners lagging and underperforming. And, do we see that start to switch here sometime? Well, we haven't seen it switch for anything like AUY or Harmony. Or some of these kind of, more risky gold mining companies, right? But then you take a look at some of the best out there, and you go, well, even these, they're still lagging, they're still dropping, they're still struggling, to hold any sort of gain right now. So, it's just still a place that even short term, I don't like, to say, well, hey, you know what, gold today, let's go. Just because the miners are still lagging. But when we see that shift and when we see that change, and we will, we will see that change. And when that happens, I think it's going to be pretty explosive. I think it's going to be pretty a pretty strong, move. And I think for a lot, it's going to be something like this right back here, where we're talking about something changing, a $12 stock changing by integers, not by 20, 40, 60 cents here and there, but trading by $1, $2, even $4 as it goes forward there. All right. So, my take there on oil, my take there on gold, and kind of where they sit. They often are tied to the U.S. dollar, and the U.S. dollar has a very interesting reversal in it today. U.S. dollar hit a new high today and is reversing off, and that's some interesting price action for sure. We have some negative divergence in some of the momentum oscillators for the dollar. The dollar's been on a nice upward channel here, nice upward trend, but some of the things like a MACD and other momentum oscillators are actually starting to show that this is weakening and that, we're starting to see, kind of path of least resistance going forward being lower. A drop in the U.S. dollar would take a lot of pressure off the global economy. But so far we continue to see, the U.S. dollar continue to be very, very strong. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.